Outsourcing versus vertical integration. Outsourcing is also why vertical integration is no longer as popular as it once was. Many firms that once owned their own raw material supply lines have changed their thinking and have started outsourcing instead. Although owning a supplier assures a steady supply of incoming material, ownership also means learning to manage the supplier's business, which is usually quite different from the owner's. Too often the owner ends up devoting too many resources to the supply business, too few to its core competencies. We can consider a company that cuts and packages paper of photocopiers and computer printers. It can reduce the risk of paper shortage by buying a mill that makes paper from wood pulp. But in reducing the risk of paper shortage, the company increases the risk of losing focus on its line of business, cutting and packaging paper. Disadvantages of outsourcing. Not everyone, however, agrees. A Dun and Bradstreet study found that 1/4 of all outsourcing relationships fail within 2 years, and one half of it within 5 years. In addition, many executives told researchers that suppliers too often don't understand what they are supposed to do, charge too much, and provide poor service. Moreover, when disruptions occur in supply chain, the cost to both parties can be high. For one thing, replacing failed outsourced operation can be very expensive, especially if the firm wants to return to the outsourced activity. Another risk in outsourcing is the loss of control over both operations and information. Viral marketing. Combining technology with the marketing methods usually result in new ways to attract customers. Viral marketing, so called because it uses words of mouth that spread information like a virus from the customers to customers, and relies on vast reaches of the internet to supply face-to-face communication. Messages about new cars, sport events, numerous other goods, services flow via internet among potential customers who pass the information to others using various formats such as games, contests, chat rooms, bulletin boards. Marketers encourage potential customers to try out products and tell other people about them. Viral marketing can lead to consumer awareness faster with wider reach than traditional media messages, and it all happens at a very lower cost. It works for two reasons. First, people rely on the internet for information that they used to get from the newspaper, magazines, and televisions. Equally important, however, is the interactive element. The customer becomes a participant in the process of spreading the word by forwarding information to other internet users. Business process management. Every company performs numerous processes that provide goods or services, whether the customers or for the other departments within the firm. Human resource departments perform interviewing and hiring processes. Payroll departments perform employees' payment process. The purchasing department performs the process of ordering material. The accounting performs the financial reporting system. Marketing performs the process of taking orders from the customers. A process, in short, is an activity that adds value to some input, transforming it into an output for a customer, whether external or internal. Process is an activity adds value to some input by transforming it into an output for a customer, whether internal or external.